Hello, and welcome to the offering webinar for FreeUp Storage Madison. My name is Ryan Gibson, Chief Investment Officer for Spartan Investment Group, and I'm joined tonight by Spartan's CEO, Scott Lewis, and Spartan's CFO, Ben Lapidus. But before I get started, I'd like to get our disclaimers out of the way. We aren't offering any legal, tax, or investment advice. Please seek your own outside counsel and perform your own due diligence before making investment decisions. If you have any questions, please email investors@spartan-investors.com, or you can type them into the Q&A section on the Zoom call, and we'll get them answered as we progress. To subscribe to the offering and review offering documents, please visit the investor dashboard that is accessible on our website at spartan-investors.com. And if you need an invitation to the dashboard or have trouble logging in, please email us at investors@spartan-investors.com. This offering consists of 2 Class A locations in the strong market of Madison, Wisconsin. Spartan has negotiated a great price for the facility, and we can expect to expand the property by 20,000 square feet of storage in a city where future development of single storage is not allowed. The asset also projects day one cash flow to our investors. But before we get into the details of the offering, I'd like to give a little background on the Spartan team who will be performing the property management, construction, and operations of the asset. Spartan is headquartered in Golden, Colorado, with a satellite office in Seattle. And in 2020, Spartan was recognized by the Inc. 500 as the 8th fastest growing privately held real estate company in the United States. Spartan operates its self-storage facilities under the FreeUp Storage national brand. You can see that we have about 17 locations currently and are expected to have over 30 store locations nationwide by the end of quarter 3. To date, Spartan has over 6,700 units, 50 employees, $150 million in projects under management, over 400 active investors, $80 million raised in private capital, and 10 of our investments have gone full cycle. So let's get into the details of the project. Madison is one of the nicest markets that Spartan has invested in. It has the strongest population growth in the state, has the best employment, serves as the capital of Wisconsin, and within 15 minutes of the property, there are over 10,000 new residential units being built, and the facility is also less than 15 minutes from the University of Wisconsin, which drives a ton of demand for the property. The facility itself is a Class A facility and the nicest property in the market, arguably one of the nicest properties that will be in the Spartan portfolio. It offers both climate and non-climate controlled units, and uniquely, it offers exterior drive-up climate control units, which is incredibly rare and in high demand, especially in markets like Madison and the colder climates. Due to the quality of the asset, Spartan has received terms from numerous banks that want to lend on the property, but specifically, we've secured financing right out of the gate at a low 3.55% interest rate, 30-year amortization, and it comes with an 18-month interest-only period. This enables strong cash flow on the asset right out of the gates to our investors of over 8% cash on cash in the first year. Spartan has also been grandfathered in to expand the facility by 20,000 square feet. This is significant because there is a moratorium in Madison that disallows anyone from building single-story storage in the market. This creates a moat around our cash flow and severely limits the competition in the market. This offering provides 2 classes of investors. Those who invest a minimum of $50K are considered Class A, and those who invest a minimum of $1 million are considered Class B. Return projections for each class are listed below. The target annualized return is 14.7% annually for our Class A members and 16.2% annually for our Class B members. You'll see the cash flow illustration that breaks down projected profit per year based on a $50K investment. We are projecting strong cash flow, especially in year 1 due to our interest-only loan. We then expand the facility by 20,000 square feet and expect the cash flow to decrease slightly, then return as those new units lease up. There will also be a projected $17,784 per $50K invested that will benefit the investors from the sales upside of the asset. The hold period is projected at 5 years, and as mentioned earlier, Spartan performs all the asset, property, and construction management of the project. I'd like to now introduce Spartan's Chief Financial Officer, Ben Lapidus, who's going to speak specifically to the market of Madison and the demographics. Ben, take it away.
Thanks very much, Ryan. Hi, folks. This is Ben Lapidus, Chief Financial Officer of Spartan Investment Group, and I'm excited to take you through the market of Madison, Wisconsin. I went myself in April, right at the height of the third wave of COVID in Madison, Wisconsin, and that place was buzzing despite how aggressive they were trying to fight the COVID there. I remember seeing lots of folks at the university and lots of engineers building prototypes of robotic food carriers for pizza deliveries, which I was very excited about and could not wait for that technology to make it back to my city. But that was emblematic of how progressive Madison, Wisconsin is in terms of fostering technology, fostering education, fostering entrepreneurship, which has been the seed of its growth, which is the leader for the state of Wisconsin. So let's talk about Madison, Wisconsin. It is the fastest growing city in Wisconsin. It is the fastest growing MSA in Wisconsin. It is the fastest growing county in Wisconsin. And as a result, home prices in the area have appreciated 7% per year for the past 5 years. This particular deal has a Madison address. It is part of the city of Madison. At a larger level, Madison has historically exceptionally low unemployment, better than both the state and the national averages. It stayed below the state and the national averages during COVID and has stayed below the state and the national averages after COVID and has almost returned within a point to where it was pre-COVID. In terms of net migration, Dane County, where Madison sits, saw the highest net migration. More than 30,000 people, net folks, moved to Dane County in the past decade, well above all other counties in the state of Wisconsin. You'll see on this development map here, the yellow dots are our subject sites, and all the blue dots are where major development is occurring around the city. More than 10,000 housing units are planned in the pipeline within 15 minutes of the subject site. And you'll see the one most to the west in between the two lakes, Madison Public Market in the downtown area. It's going to be the city's flagship redevelopment. Expected to open pretty soon. It's attracting over 500,000 visitors a year anticipated. Madison downtown was buzzing when I was there. The site itself was 78% occupied when we got the facility under contract and started increasing in physical occupancy by 2% per month. So when this was put together, it was 80% occupied. It is now more than that. That is compared to 97% occupancy in the market, which is extraordinarily high. Why is the subject site occupancy lower? Because the seller recently expanded the facility and is still in lease up with that expansion. He also has incredibly high rents. It's almost like he's trying to not get customers. So we've underwritten a rent reduction right out of the gate to get folks into the facility. But since the facility was marketed through the broker package until this point, collections that the seller's been able to achieve with nominal managerial oversight have increased by almost $20,000 per month. That is over 20% increase in less than 4 months. So despite the fact that he is a one-man show that only shows up on site when he gets a phone call, if he chooses to show up, he's been able to achieve a solid economic occupancy increase. So I'm excited to see how Spartan takes it and runs with it with a full-time manager on site and our operational prowess. Finally, when we look at the market, we look at the demos, population, household income, and we see everything that we like here. We see over 1% population increase. We see over 1.5% income increase. Both of those numbers are per year. And we see raw population numbers of 40 to 70,000 people, which are excellent size demographics for the immediate area. So once again, we're very excited to be in the city of Madison. It is a notoriously difficult place to build. Two of our larger competitors that we are always competing against in terms of market share failed to get new projects off the ground. There is not a lot of opportunity to produce new supply in this area. It's only going to have increases of demand and static supply. Our expansion is the last grandfathered single-family roll-up self-storage allowed to be built in the jurisdiction of Madison, Wisconsin. So we're very excited about the market. And with that, I'm going to let Scott continue from here.
Thank you, Ben, for the overview of the Madison market. Now let's get into the property here. This property consists of 3 different parcels, but there's really 2 locations, as 2 of the parcels are located right across the street from one another. The first parcel is on Dairy Drive. This property is recently built, as you can see. It's a combination of metal buildings and some stonework. There's some unique things about this property. As you can see, those doors on the right-hand side, both the green and beige ones, those are insulated exterior facing units. That's a very unique feature of the Applewood properties. And that feature is located at both locations. In addition, there is interior climate controlled, your very standard interior metal hallways. These buildings were provided by Tracti. They're all well done. This is a fantastically built site. In addition, we have our standard drive up. Here at the Dairy Drive location, we've got 229 units spread out over 5 buildings, occupying about 1.8 acres. The next location actually has 2 parcels, and they're right across the street from each other. Both of them are built similar to the Dairy Drive. They're metal buildings consisting of your standard non-climate controlled drive-up units, your standard interior climate controlled units, and then also those exterior climate controlled units. Over here at the Marsh Road locations, we have 480 units spread out over 10 buildings, and that's on 5.38 acres. We do have an opportunity to expand this facility. On one of the parcels, we have some additional land that when the owner went through the conditional use permitting in 2016, as storage is not a matter of right use in Madison, and it is actually very difficult to get any projects approved. He does have the ability to add about 20,000 square feet. The CUP is since expired. However, Spartan has already started that renewal process. We've gone through the alderman and received approval through her office, and we've submitted the plans to the city, and they said they've taken about 30 days. That was about 2 weeks ago. So we're hoping to know whether we can expand or not even before we close this deal. And if we can, that adds 20,000 square feet in those 3 buildings that are outlined in red there. So let's talk about our improvement plans. So for this facility, it's a Class A beautiful property. There are not too many capital improvements that we need to do right out of the gate. Just the fence, maybe. Other than that, this is a solid facility, so it'll all be operational coming out of the gate as the owner is currently operating it, and we're going to bring this into the FreeUp brand portfolio. And with that, as everybody knows, we've launched FreeUp Storage in 2020. That is Spartan Investment Group's internal property management company where all of our properties are branded FreeUp Storage. We do that so that we can increase rents to market rate. We are also standing up FreeUp University inside of Spartan Investment Group. That is for staff training to enhance the customer experience. We have a community relations program where we develop community partnerships and business relationships. And as I mentioned, we'll develop some ancillary revenue streams through tenant insurance and retail sales to just bolster up the GPRI for these facilities. Let's talk about the management of these facilities, both from an asset and property management perspective. For asset management, this is housed inside of Spartan Investment Group. And asset management consists of 4 main functions. First is market assessment. We have to completely understand every market that we're in to understand the life cycle of the particular facility. We always have to be assessing whether we should be selling this facility or not, how we're doing with the overall financial performance of the facility, and we do that through market studies. Going back to life cycle, each facility has a life cycle. Now, while we say each deal is X number of years, that life cycle might change based on market conditions. What we don't want to do is hold on to an asset just because we had a number of years in the business plan. However, the market says that the life cycle is over because it's a great time to sell. Asset management really focuses on the financial performance of the facility. They're assessing not only the gross potential rental income, but also the expenses and the debt to make the facility perform as absolute top notch as possible. And the last is the liability side of the house. And this liability isn't necessarily on-site liability, but it's making sure that it is well insured. It's also making sure that the contingent liabilities for any particular facility are managed across the entire portfolio and that we're covered in any aspect of the legal ramifications in the asset management space. The next we'll talk about is property management. SIG manages all of our properties under the FreeUp brand, and that is internal to Spartan Investment Group. We have an entire property management team that are all working under that FreeUp brand to manage every single one of our properties, just like they would if it was a third party. And their main focus is on 4 areas. The first is revenue. They need to maximize the gross potential revenue of the facility. And that ties in with that market study from the asset management side of the house, because they'll know what our competitors are doing and how much we can push our rents. The next area is marketing. We have to be marketing all the time. We need customers constantly coming in, because while the average lifetime of a tenant is about somewhere between 9 to 12 months, we always want to have a steady flow of new tenants. In order to keep that steady flow and to keep our current tenants very happy, we have to do our own maintenance. And that is part of the property management crew of making sure that all aspects of the facility are top notch. And then lastly, there's a compliance perspective for property management. And that is making sure that all of the labor laws are adhered to for our managers, in addition to making sure that all of the lien laws, because as one of the things that we love about storage is if someone doesn't pay, you're able to confiscate their goods and sell them. Well, each state has a little bit different process, and we have to make sure that we're in compliance there. And with that, I'm going to turn it over to Ben for the financial analysis.
Awesome. Thanks, Scott. All right, folks, so I'm going to walk you through the financial underwriting. We're going to look at some of the numbers. All of this information is available in our underwriting file on our investment portal. Looking at the income statement, there's a couple of things that I want to call out, and the first one is in revenue. So between year 1 and year 4 being when we expect our business plan to be complete and our revenue to be stabilized and to have nominal growth from there, we're expecting a 25% revenue growth from 1.6 million in gross potential income to 2 million in gross potential income. And in terms of gross operating income, the net revenue, we're looking at almost a 33% increase from 1.5 million to over 1.9 million in gross operating income. That is the biggest driver of value that we're pushing here, is the ability to lease the facility up and get extra rents out of the expansion. Looking at the capital stack, we're able to get a 3.5% interest rate, 18-month only loan. This is not a government loan. This is a credit union loan. We're very excited about these debt terms. They are the best debt terms that we've been able to achieve in our portfolio to date. And that's giving us a year 1 debt service coverage ratio of 2.7. It's a very attractive debt yield for the lender. In fact, the originator for Alliant Credit Union went to school in Madison, Wisconsin, so he's very excited to have the opportunity to lend on this asset. He also sold his own portfolio of storage to Public Storage over 20 years ago, so again, he's very excited to have the opportunity to lend on this asset. We're excited about the relationship with Alliant Credit Union. And throughout the entirety of this project, we are seeing over a 1.8 debt service coverage the entire way through, which from a risk mitigation standpoint is very exciting to us. We do not have thin cash flow margins. It allows us to cash flow above the pref the entire length of the hold period. The final thing I want to mention is that we've underwritten conservatively for property tax increases. Wisconsin is notoriously a difficult place to fight property tax increases after sale, so we've increased the property tax assumption up to a 97% assessment ratio of the purchase price. Basically, we're assuming that the county is going to tax us on the purchase price, which is not something that we have to do in every state, but for Dane County, we assessed that that was going to be the most prudent approach to underwriting property taxes. So you'll see in year 1, we have $108,000, whereas in year 5, we have almost $350,000 underwritten in property taxes. So this income statement in year 5 is giving us a valuation of almost $24 million, producing almost $5 million in upside, in addition to the 7 to 8% cash flow we'll be able to achieve along the way throughout the length of this project, which is very exciting. The sale is projected to be in year 5. This is not guaranteed. This is a target hold period of year 5, and it's based off of an assumed exit cap rate of 5.4%. This asset has the potential to sell for a 4.5% cap rate today. Average cap rates are below 5.5%, but because this is a recent build in an exciting MSA that is very difficult to add new supply to, we are under the impression from multiple sources that this would list for a 4.5% cap rate today, stabilized. We've underwritten it to sell at 5.4% cap rate. So how does this all shake out for an investor who is injecting equity into this opportunity? Well, the minimum investment for Class A members is $50,000, and that gets you ownership of 0.375% per $50,000 invested. That comes with a preferred return of 7%. The first 7% of annual cash flow goes to the investors before a penny is paid out to the sponsor, Spartan Investment Group, in upside. Over the 5-year period, that is $18,249 in operating returns, $17,784 in sale upside. So more than half of the income is coming throughout the course of the project. Less than half of the income coming during the liquidity event. That shakes out to an annualized return of 14.7%, which is an equity multiple over a 5-year hold of 1.73x. If you're a Class B member, then the minimum investment amount is $1 million. That is 20 $50,000 shares. The ownership of those 20 shares would be 9% of the overall project. The preferred return is the same, 7% on your $1 million plus an investment, producing total operating returns of $369,000, 36.9% over the 5-year period. That's over 8% returns. The upside is $443,000. That is, again, over 8.5% annualized on the upside for a total return of $812,000. That's a target annual return of 16.2% over a 5-year hold, is 1.81 equity multiple. Every deal that Spartan looks at, we like to bookend the returns with a sensitivity analysis. We have our likely scenario, and based off of the most important features of an underwriting model, we look at a worst case scenario and a best case scenario. This takes into consideration variability in hold period, in cap rates, in maximum economic performance, in lease up, as well as a couple of other key metrics. So while we're targeting a 14.7% annualized return for Class A members who invest at least $50,000, we are bookending our worst and best case scenario to say we estimate the annualized return to fall between 10% and 17.6%. In summary, we're raising $6.575 million. The minimum investment amount is $50,000 for Class A investor and $1 million for Class B investor. For Class A investor, our target annual equity return is 14.7%, which over 5 years is a total of 73.5%. All equity investors, both Class A and Class B, benefit from a 7% preferred return as well as bonus depreciation passed through to the investors. Class B investors get the same 7% preferred return as well as bonus depreciation allocated to them. The total annual return is 16.2%, which over a 5-year period is a total of 81.2%. And with that, I'm going to hand it back off to Ryan to take us home.
So as we come to the conclusion of the webinar, we'd like to just remind you that if you'd like to invest, simply email us at investors@spartan-investors.com, or you can log right into the dashboard and start the subscription process. When you log into the dashboard, you'll see the FreeUp Storage Madison offering, and when you click into the room, you'll find financials, details surrounding the project, and all the information used, and eventually a place to sign in and subscribe. The offering is open on a first-come, first-served basis. You subscribe on the investor dashboard. You access all documents from the dashboard. And we'd like to remind people that we never ask for financial or sensitive information via email. Please make sure that you verify all wiring instructions. And we highly encourage you to call one of us to ensure that you have the proper wiring instructions before sending the wire. I'd also like to introduce our investor relations team, Ted Green and Lauren Burchell, and myself, Ryan Gibson. We are your investor relations point of contacts at Spartan Investment Group and will help you through the investment process. We verify funds transferred, we help you set up your account, and we help you subscribe to the offering. You can reach out to any one of us during the investment process to answer any questions or help you subscribe to the offering. So at this point, we're at the conclusion of our webinar. We're going to go ahead and turn things over to the Q&A section. But we'd like to thank you for attending the webinar and look forward to potentially partnering with you in the future. Thank you.